Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today we're going to be talking with Dan Chemist, previously of Vast Display Network. We're going to talk about the 5 tips for cannabis companies thinking about selling. Dan sold his company after being on season 2 of the Marijuana Show, which is like Shark Tank for cannabis, and sold his company to an LA media company for $2 million. Dan, thanks for being back.
Well, Kron, I love getting a chance to hang out on your cast because I do some learning here, right? So it's one of those things where thank you right back, okay?
Absolutely. So just kind of diving into the gist of this article, they're talking about the legal cannabis sector fundamentals having strengthened in recent months thanks to the new markets coming online and raising sales in existing markets. So as a result, there's been a wealth of mergers and acquisitions. So existing operators are increasing the pace of acquisitions and new investors are flocking into the cannabis industry, buoyed by these investment opportunities, which has led to smaller operators selling their businesses to the larger players who are looking to consolidate or enter the market or both. So it can be a smart move if properly executed, but there's a lot of ways in which it can go awry. So there's 5 crucial steps for operators thinking about selling their business in the coming years. The first of which is to be on the up and up. So because some of the negative perceptions related to the cannabis sector, it's utmost importance to have your due diligence. So when operating your business by the law, there might be a lot of skeletons in the closets that'll come back to haunt you, leading to buyers completely walking away, at the very least, a big discount on the valuation. So if you're out of compliance, get back into compliance before going on the market.
That's funny, so one of my tips was going to be honest, right? Because here's the thing, these crew, they will find out, okay? I mean, the fact of the matter is, people that are looking to invest, you don't run across somebody very often who's just like, oh, here's my check, whatever, don't care, right? As a general rule, yeah, they're going to come at you with a fine-tooth comb and a couple more fine-tooth combs. So that whole thing of, the good truth or, hey, I think I can hide this thing in the closet or whatever. You can't, you won't, and don't. Be honest.
I'll give you a couple examples with a recent valuation with, was it Weed Maps? Someone, I don't know what the company is, but there was a valuation at 420 million. That to me is an arbitrary number, right? And so if you're going to make up a number, what you're going to ask is for future lawsuits. So doing your due diligence on a valuation is important, and being on the up and up and being transparent about how much you're worth is going to help because you're not going to be sued down the road.
Oh, a joke valuation is going to get you joke investors.
That too. I mean, there's a lot of speculation, right? But you don't want people to be upset with you in the future about being misled about that valuation.
Well, that's fraud.
Well, there's other things to worry about too. I just spoke to somebody in Washington who lost their license, a producer processor license, because they had outside investors who came in, which was not legal in Washington State, very similar to the laws in Maryland. And so when the regulatory authority, the Liquor and Cannabis Board, came to them asking them for their financial statements, they didn't give them to the regulatory authority, therefore lost their license. When I was an advisor for this company, I walked away when this group came in because as an out-of-state investor, they were already breaking rules. My lawyer told me only break one law at a time. I smoke cannabis, as a federal law. So I'm very, I walk a fine line with everything else. So I walked away, thankfully. Now that company is in several lawsuits because they're going to have to sue if they have a fiduciary duty to their stakeholders. They just lost their license and now their valuation is trashed.
Well, just about every crew that I see is operating so desperate that slowing down and putting additional resource at doing it right is, again, they're already desperate, right? And at the same time, here's the deal. These are complex deals. There are a lot of different rules and regulations that need to be followed to a T. And ultimately, again, I come back to be brutally honest. One of the things we did with Vast is I told the truth, okay? And, people would ask me, where you at? I'd tell them. they'd be like, well, you're not all that awesome. I'd be like, yeah, and I'm not asking all that much bread, right? Okay, be honest.
Yeah, on the flip side of that, free information is probably not worth listening to. So number two is that cheap advisors are costly. You have good bankers, lawyers, and accountants are worth it. These are the players that you put on the field, and you're only as strong as the weakest link. So do you need the most expensive players at every position? No. But if you hire a less known accounting firm, for example, for your audit, it could reduce the player's perceived value of your business. And likewise, you could hire somebody like me who I give good advice, but if you don't listen to it, and then you end up not only losing your production processing license, but then you're going to be sued because the regulatory authority just found out that you had out-of-state investors. I mean, there's a whole lot of things that if you do have good advisors, you should probably listen to them and not have founder syndrome, which is when CEOs or founders get in their own way. And so that could be self-sabotage at the worst or at the very best. It's just not delegating and not getting things done. When you have a team, utilize them, and cheap advisors are costly.
The number of times in my life, so I'm old, okay? The number of times in my life I've heard the cliches, right? And one of the best cliches in business, the most expensive thing in the world is a cheap lawyer or a cheap accountant, okay? And in this case, again, one, the pedigree, right, of having a cool firm that actually is managing and working with you, certainly. And also the truth of, look, if you're packaging this for sale, don't half-ass it, right? Because what you're going to get from that is, again, these things are cumulative actions, right? You do not just walk in and, oh, look, I sold my business. It is a marshaling. It is a long-term, serious life event. And in turn, being in a place where you're, again, you've got rock solid partners. You mentioned it there, the whole thing of, okay, if I'm going to spend in my business, if I'm going to spend my professional services, I'm going to see to it that those are top-notch professional services. You have to.
Yeah, and a lot of times these businesses that are failing, I think 15 to 25% in Washington failed last year, and that some of that is consolidation. I know that there are players picking up licenses for $1. And they're just giving those licenses away. But it's a matter of, and we're going to get to number 3 here, get your house in order before engaging. Otherwise, you're going to just fall to the wayside. So often small companies aren't ready to go through a full transaction lifestyle when they're engaged with potential buyers. They may have forgotten an inbound offer out of the blue or they want to move forward on, but they stumble when it comes to time to proceed into diligence and detailed discussions. The first order of business should be to get your audited financials from a real accounting firm, ideally 3 years minimum too. So this is particularly important if you want to be acquired by a public company. If a public company makes an acquisition that's considered significant according to the Securities and Exchange Commission, or SEC, then the acquiring company needs to file target pro forma financial statements within 75 days of closing, and this will prove an issue if the target doesn't have those financials in place. Or if a regulatory authority asks you for them and you can't provide for them, you're going to lose your license. And if you don't have that license, what are you doing? I mean, that license is worth 20 million or 25 million in Arizona, 15, 20 million in California, 150,000 in Washington at most. And there's a reason for that. If you don't have your stuff in order, this market is just kind of proving to be one of the cheapest markets, not being vertically integrated and having a mess from the regulatory authorities all the way down.
Again, first, the hard reality is most of you that are listening to this thinking, yeah, the answer is I'm going to sell my business. You're thinking that because things are bad, not because things are good. Okay, you're trying to get out. And the truth is, who wants to buy that? The carpetbagger, the individual who's like, yeah, I'll give you $27 for your farm, right? Whereas again, you want to make a killing, you want to make a real sale, start there. Because again, later the whole, okay, we got to get everything cleaned up. Really? That again, start there, keep it cleaned up.
So in the securities industry, the time value of money is important, especially with stock options, derivatives. Intrinsic value will diminish as time goes on. And so with any deal, time can kill that deal. You want to minimize your time in the market and then due diligence phase. You want to get your house in order, set up a data room that contains all the documents that buyers want to review, and have someone with an M&A experience run through your diligence. It's better if you know where your skeletons are buried now before when buyers discover them. You'll need to halt a process for 3 months waiting for key items to be resolved or to find out the important documents buyers, or otherwise they'll lose interest. And then there are your other events that can spook the markets. The longer the process hangs out there, the greater the risk that the deal goes sideways and falls apart. I've personally seen that a couple of times where someone will find a deal and then go to try to find something better. It's simply greed, or again, founder syndrome, where they're self-sabotaging it. I've seen this with one particular individual at least a dozen times. Get a deal and then run around and try to find a better deal. And then eventually the first order or the first deal is tired of waiting, and the second offer was never really interested in the first place. More of a purple frog investment that I call, where investors will carry around a silver platter and go to other investors and say, hey, look at this neat purple frog I have. And they have absolutely no interest of cutting a check, but they do love having this new neat niche thing, which is cannabis, the purple frog analogy, to carry around to their other investors. And that takes time away from real stuff. And ultimately that time kills the deal.
Oh, the truth of, first, there's more posers in every subsector of this discussion, right? There's more, wannabe investors. There's more wannabe businesses. There's more wannabe consultants. There's more wannabes, right? And so figuring out, one, who do I act on and act with, right? What is actually real? And then also, the cognizance that would say, all right, if I'm going to do this, right? How do I, the number of times that I've been there where I've said, okay, great, we'll go tell the cool investment crew about you. Well, I don't have my deck ready yet. I need to get this going. Geez, I'm behind on that. Yeah, I need time. Sure, you can have time, but this is a fluid market. I mean, it really is. It's a perfect storm of needing really to, thread the needle. I need all your documents. I need to know they're accurate. I need to know you're ready. I need to know your numbers are right. And I need you to be in a place where when we find you that right deal, you can actually sit down and focus, right? And again, it's a lot of need, but it's the only way the deal's going to happen, because again, there are a lot of players out there looking to be turned, looking to be essentially acquired or given the capital to take that next step. And there's no such thing as given the capital. You earn it. You earn it.
I've got a Canadian-based company that's expanding into the U.S. via California, and so I'm looking for companies to be strategic partners with. And one company was really excited, and it's been over a week since getting a document from them.
Yep.
I've reached out to them. Time, if you're not on this Canadian company is going to be filing an IPO in September, as well as over-the-counter publicly traded in the U.S. same time in September. And they're not going to be waiting around. So if you can't write a document, if you can't respond to me and let me know that you need it, that you're interested or otherwise, they're going to be moving on. If you just wait around, I've seen deals where individuals haven't responded to opportunities to expand to Puerto Rico, for example, and then they've lost out on $250,000 investment opportunities because they couldn't send out an email. Or, there's just numerous examples of people.
Before VAST was funded, okay, I went through 5 different essentially near deals, right, where we were on paper, where we're looking at each other and we're having conversations. When VAST finally got funded, okay, desperate to the point of purple. Just run out, run hard, etc. The sale was its own winding, complex, checking in all the time, behind the scenes, frustrated. Okay. And at the same time, in the end, that's the thing is, first, no two deals are exactly alike. Okay. Second, how long is it going to take? As short as I can make it, and as long as it's gonna. Okay. And then the other thing about all of that is, again, this whole, it is no doubt, it's the whole thing of what we're telling you is the hard truth. It's a complex term. You need to be in a place where it's like, yeah, you mean I got to have it all right and all ready to even start? Yeah, you got to have it all right and all ready to even start, because you're playing, again, if you're going to go ask for somebody for millions of dollars, okay, then that's not the back of a napkin with a few notes on it, man. It's a detailed plan.
Mm-hmm. Yeah, and yet there's still a lot of speculation and crazy stuff from even publicly traded companies. A lot of these other ones are private companies, but you look at MedMen or Canopy, and the valuations are sky high. So number 5 is be realistic with valuations. We kind of went over this on number 1, but it's just simply having a valuation being driven by fundamentals. And to be candid with you, we aren't on fundamentals and technicals and haven't been for over 10 years. It's literally this right now, this market is the longest bull market in history. And it's all based on quantitative easing, which is printing money. And it's not based on fundamentals. It's not based on technicals. Ultimately, what we're talking about is just having your company be valued appropriately. And you're looking at a lot of speculation in Canada with CEOs making excessive amounts of money, millions of dollars, when they should be making maybe a couple $100,000. And so that speculation is really throwing things out of whack.
Well, again, some things that seem to fly in the face of each other, right? So, for instance, one, you got to ask, right? You got to ask. So if you think that you can swing $100 million ask, okay, more power to you. And at the same time, you also need to understand that there is a very fine line between audacious and asinine. Okay. And one of the things that we see a lot here in the space, again, I'm not going to tell you that I haven't seen lightning strike. I've seen lightning strike. I've seen a funder literally walk in and get out a check, right? Twice in 5 years. Okay. Okay. Now, the other thing I've seen at this point over 100 times, okay, is the process. So again, if you're going to count on your business doing anything, I mean, sure, you can try and count on lightning in a bottle. Boy, that's tricky, right? I would count on the process, and I would look at what do most businesses that are successfully, turned, sold, merged, acquired, what is the process for most of them? I would stay open-minded. Certainly, I'm at the cocktail party and somebody says to me, geez, that sounds like a mighty fine business. I've got a check for you. Okay, I'm going to listen. And at the same time, again, stay realistic and recognize that certainly we can all dream, but how things are really done and how things are built and how things, really happen, methodical, step by step, make those steps happen fast. Don't let somebody wait a month after they say, geez, can I, send me your profit and loss statements. Well, I don't have those done right now. I'll get them to you, right? No, have that stuff on the shelf. And at the same time,
number 3, get your house in order before.
All of it. That was actually more metaphorical from the perspective of, what, have it all ready so that you're not holding me up when I want to buy your business. Mm-hmm. You can't be the thing that slows me down, because there's going to be other things that slow me down, right? So,
yeah, we've seen that. If you don't have your house in order, and if you don't have good advisors, and if you're not on the up and up, and you don't do things in the appropriate amount of time, I've literally seen companies talk themselves out of a deal or decrease the amount of valuation, basically just screwing themselves out of a deal by not following these rules.
Well, right. I mean, right there, if somebody's listening to you, right, and they're like, well, that's not us. We don't, I'm trying to sell this thing, but I don't have my paperwork in an order. I haven't been getting everything ready. Geez, we're not. Don't waste the time. Okay, because here's the thing. One of the things that you will find about these investment crew, they're willing to be patient, they're willing to be nice if you're honest, and that means coming when you're ready and being ready when you come. Okay. And the whole thing of, oh, I'm going to go make a run at this. Let's see if we can hawk this thing. Right. No, because what'll happen, you'll get there, you'll look like a dork, and you won't get the call back because, again, I can tell you, I have a Rolodex of some really powerful phone numbers. I have some phone numbers of people who will literally can change your world. Okay. But I'm not giving them to you unless I'm 103% sure that that you're ready, because these people look to me to not waste their time. Okay. To not get them that crap. They want the fucking, they want the gem. Right. And, so that's again, it's funny because you and I, we're known as pretty funny people, right? We run around, we laugh, we do a lot of neat media stuff, blah, blah, blah. But ultimately, the people I'm accountable to, they don't see me as a funny individual. They can't. Okay. They see me as a highly effective finder who goes out and finds them opportunities. And I don't call them unless the opportunity is ready. Because otherwise, again, everybody's calling them. I only call them when you're ready.
Well, just like a good company, you want to be able to add value, or you want to be able to show that you're transparent, that you've got your stuff together, that you work in a timely fashion, and that you're professional and add value when you come to the table. And when a company can do that, then they're going to be able to get top dollar from any investor. I want to thank Dan Kimmis of Vast Display Network for being on the podcast this morning. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.